Hello, and welcome to today's session, which is hosted by the University of San Diego Alumni Association and its Burnham-Moores Center for Real Estate. My name is Kara Marsh-Profit, and I am the Director of Alumni Operations and Engagement for USD's Office of Alumni Relations. I am also a proud alumna of USD. Before I launch into today's session, I must share with you that the Alumni Association's mission is to engage and enrich the Torero community for life. We strive to provide meaningful opportunities for our alumni and friends to connect with one another and with the University of San Diego. Today, we're happy to highlight an alumni professional who has volunteered his expertise to benefit our fellow Toreros. Now to our program. It is my pleasure to introduce today's facilitator and featured alumni professional. Joe Bertacchini is joining us from the Burnham-Moores Center for Real Estate. A true blue Torero, Joe graduated from USD with his undergraduate degree. Joe, welcome to the screen, and thank you for facilitating today's session.
My pleasure. Thanks for having me, Kara.
Absolutely. Now I'd like to welcome to the screen our featured alumni professional. Born and raised in San Diego, Brendan Bracken is from USD's great class of 1998. While at USD, Brendan played football for the Toreros, and with a history in lending, loans, and all things mortgage, Brendan now serves the People's Mortgage Company as VP Southwestern Region and as a mortgage loan officer. People's Mortgage serves 40 states in our great US. Brendan is happily married and has an 8-year-old son. Brendan and Joe, take it away.
Thank you, Karen.
Appreciate it. Well, Brendan, thanks again for taking some time to join us today. I really appreciate it. We're certainly lucky not only to have you as an alum from the University of San Diego, but also as just an incredible resource, not only for our alumni, but just for the general population that is looking to get into home ownership. Especially as someone who's been in the industry, serving families and helping families get into, I think we had chatted before, something like 4,000 families that you've helped get into homes over your time in the industry. So we appreciate you, sharing the information that you have and experience to help some of those people who are interested in getting into homes today. So thanks for joining us.
Happy to do it. I'm fortunate to own real estate myself, and it's primarily been because I fell into the industry as I was finishing my senior year at USD back in 1998. So 27 years now, helping a lot of families, and I'm humble with that experience. I'm also hungry to provide great information to today's consumer.
Well, thanks so much. Appreciate it. Let's just jump in because I think as we look at the economy and the market right now, there's certainly a lot of challenges that potential homeowners are facing. What challenges are you seeing out there for first-time home buyers in the market that maybe you can share with everyone right now?
Yeah, I think the number one challenge is affordability. Prices have increased significantly during COVID, post-COVID, because we had an extremely low interest rate environment. Anytime there's low interest rates, that creates a low monthly payment in relation to the price of the property. We also had low supply. And so the existing demand overwhelmed the supply, driving prices higher. Now, post-COVID, 2022, 2023, we as a nation had relatively high inflation that drove interest rates higher. Interest rates today are between 6 and 6.25% as we're recording this. And that just creates a challenge for a first-time home buyer where monthly payments could be almost 2 times higher than where they were 4 years ago. The second challenge I see is that we've got a supply problem nationwide. We're over 3 million units short of housing units to fulfill the current underlying demand. I also see the age of first-time home buyers. We see it taking more years for people to save for a down payment. So we're seeing first-time home buyers increase in age, which I don't think that's a good sign. I'd rather see people have an opportunity to be owning an asset where they live, to be able to capitalize and benefit off of the home price appreciation. And then the final, challenge that I see is, general economic weakness, where wages are slowly increasing on average, but it's such a chasm, a wide disparity between real estate prices versus wages. And so wages really need to, keep up with the cost of housing.
Well, and so it's interesting you say that, because I know that People's Mortgage, you serve, I think, almost 40 or all 40 states,
Yep.
50 states. I mean, are you seeing that in every market where wages are, there's that disparity, or is it really specific to San Diego or California?
I see it in multiple markets. It's just worse in California because the house pricing is so much higher versus what wages are.
Got it.
So
Okay.
the expensive markets on the coast, it's just a lot harder. And so
Yep.
we want to try and our slogan is empowerment through creativity. So we want to provide creative solutions to help bridge that gap and make things affordable if possible.
Yeah, and I think that's really where you bring the most value to your clients into the webinar here is that creativity element. So looking at some of the things that are, potential first-time home buyers are looking at is down payment numbers.
Yeah.
How has that changed over the years? Obviously, going back to the GFC and what happened there, down payment amounts have changed. What's the typical down payment that's required, and what kind of solutions for individuals where maybe they don't have the ability, even over saving a couple of years, might not have the ability to get there? Do you have any thoughts on how we can creatively come up with solutions on down payment?
Yeah. But let me ask you, Joe, a quick question. What did you think a typical down payment percentage is required?
Well, I mean, back in the day when I was a first-time home buyer, it could be as little as 5-10%. And
Okay,
now
good.
word on the street I hear is, much, much higher than that, which when you look at, as you mentioned earlier, the affordability, back when home prices were median in San Diego, $500,000, you could typically come up with a, 5-10% down payment for that. But now, what's the median home purchase price right now?
North of $1 million in San
Yeah.
Diego.
Yeah. So I mean, now to me, it just seems much more challenging for young
Yeah.
people.
Yeah. So I'll answer, a lot of people think that we still have this 20% down payment required. That's not true. So we still, during the great financial crisis from 2001 through 2007-ish, there was 100% lending with zero down payment. That was way too aggressive of lending status to make it too easy for buyers to obtain financing.
Sure.
So we're not there right now. I think from the lessons learned from the great financial crisis, the mortgage industry said, okay, we need to validate an ability to repay, and we need to make sure that we're not doing zero down financing. So there are down payments required, but there are loan programs that allow for little to almost no money down. So a conforming loan that conforms to Fannie Mae or Freddie Mac guidelines, you could purchase with as low as 3% down if you're a first-time buyer. If you're a repeat buyer, the down payment can be 5% down. FHA, the Federal Housing Administration, that's a government-insured loan program, and the down payment for that is 3.5% down. So a small percentage down payment is still available, even in San Diego and the expensive markets that we serve. Additionally, the thing that we really love to do is provide down payment assistance programs. So speaking for California, California has a state-funded agency referred to as the California Housing Finance Agency, or CalHFA. They are one of the programs that we as a lender provide, where we can provide down payment assistance, where we can get 3% of the sales price as a second mortgage that helps cover the down payment. And what's creative and unique about that is there's no monthly payment on that second lien. And interest only accrues at a 1% annual rate with 0 monthly payments required. So it's a great way where if you're buying $1 million property, you can get $30,000 from funding from the state of California that is allocated towards your down payment and cash to close.
So those are, yeah, those are all great resources. Go ahead.
I'll give you one more too, is two more things on coming up with the down payment. One is, there's ebbs and flows in the marketplace. And, I think nationwide, there's a thought process right now in September of 2025 that the market has shifted a little bit, where properties that are available for sale might be sitting longer on the market. When that happens, then a seller of a property is willing to potentially reduce their price, or we could potentially ask them for what's called a seller concession, where, hey, we're putting 5% down, but we'd like you as seller to contribute up to 3% of the sales price to cover all of our closing costs. So a seller concession can be a popular solution to source funding through the transaction. The final thing we do, we promote bridal bazaars, where we talk to folks that are near marriage, and we say, hey, just a creative idea. If you're going to get married, consider setting up a wedding registry through a firm called Honey Fund. I don't have any ownership in that firm. They don't pay me, but it's just a creative solution where you can solicit gifts from attendees of your wedding that you can then use to source for the down payment of your home.
I think that's a great resource. And I think that one of the things that's changed since the time that I was married 18 years ago was it was very much a tradition that you gave things like fine china and gravy boats.
Yep.
I can tell you that we use our fine china maybe once per year in our house.
Yeah.
And I think that there is more of a change in the way that people feel about things like Honey Fund, where it's now much more acceptable for somebody to contribute financially to those types of wedding registries, because they understand the challenges that people are going through shortly after they get married to actually get into home ownership. So I think that's a great resource. And I think for all of our prospective first-time home buyers to consider that, and do it in a way that you feel comfortable with. But I think that there's going to be much more acceptance to those types of platforms in the future. I wanted to just quickly ask, you had mentioned seller concessions. For our, in California, obviously there's a shortage of home building just purely based on land supply, or lack of land supply. For folks outside of, California or even Southern California, are builders providing seller concessions as well, to help aid that process?
Oh yeah, that is one of the better things about purchasing new construction. So many builders, like can I use a company name?
Sure.
Okay, Lennar. Let's say Lennar. They just come to mind. Lennar has a mortgage company that is theirs, that they own, that effectively they would want any buyer to utilize that mortgage company just from a service and quality control aspect. So they're not necessarily trying to have their mortgage company be a huge profit center, but they like that kind of vertical integration where you come in to a home builder, you see a salesperson, they have a special financing incentive where you purchase this new construction community, you use our lender, will grant you $20,000 as a credit towards your upgrades, or $20,000 to help cover a solar array to be installed. That's something that I, as an independent lender, would look at and say, that's a great deal. If you're a home buyer looking to purchase new construction, absolutely take advantage of any builder incentives that they're offering. Solidify the financing, close the transaction, and then if you like working with a mortgage loan officer, consider staying in touch with your trusted mortgage loan officer for potential refinance opportunities as we're seeing mortgage rates start to trickle down.
Got it. That's great. And then just one last question on the down payment front, especially because USD has really been committed to supporting our military community and military connected students. How does the down payment vary for anyone who's active duty or veteran or dependent?
Shame on me for not even bringing that up. I didn't know if we wanted to bring up the veteran home loan programs, but yeah, the best game in town, if you have been an active duty military or a veteran, you have access to the VA home loan program where it is a zero down payment purchase and there's no limit to the purchase price.
Okay, that's excellent. Good. Again, not, navigating the, VA benefits and all that can be challenging, and sometimes people aren't aware that it exists. So I'm glad you were able to touch on that.
That is one of the best games in town for mortgage financing. So if you have the VA home loan benefit, that is the best loan program to go with.
And then just, looking at, you mentioned affordability earlier, how can that affordability issue for first-time home buyers really be tackled? Do you have any solutions there for affordability?
Yep. We have a couple creative solutions, and your individual situation will dictate our recommendation. So I want to be careful in if I make recommendations, just know it might not be applicable to everyone.
Sure.
I'm a blue collar kid born and raised in Santee. My dad was a bus driver. I didn't have any family to assist me when I purchased my first property. But I want to provide a couple creative solutions that we could look at for a variety of folks in their individual situations. Affordability. So getting a mortgage loan, we look at the qualifying income of the borrowers on that mortgage loan. You're allowed a maximum monthly payment in relation to the qualifying income. So qualifying is one piece of the puzzle. So I'm going to talk about qualifying first. Qualifying, effectively, if we look at the qualifying income, if you add more income, and that isn't easy to do. You don't just go to your employer and say, hey, I want a $50,000 raise, but you could potentially bring in a co-borrower. So that could be a family member that doesn't live with you. That could also be a friend. It could be someone that you both say, hey, we're making 120,000-ish each, and let's go in together and pool our resources, and let's both go in as co-owners of that property. So it is possible to add multiple borrowers to assist with the income necessary to qualify. Other things that help with affordability is if you happen to purchase a property that has an accessory dwelling unit on it or an ADU, we can utilize the rental income from that ADU to aid in qualifying for the purchase. Also looking at a 2-unit property. There's a single family residence that just has one property on it, but there's also duplexes or 2-unit properties. You can even get up to 4 units, but a 2-unit property, you can utilize the rental income with which to qualify.
That's perfect. Good to know for the accessory dwelling units. I believe I'm correct, but correct me if I'm wrong. Do those have to be in place prior to purchase to qualify the income?
No, there's specific guidelines like Freddie. So there's conforming loans have 2 different agencies. Fannie Mae is agency 1 and Freddie Mac is agency 2. Right now, Freddie Mac is more friendly with ADUs. And so Freddie Mac has some specific guidance on what is needed and how you can qualify utilizing projected rental income from an ADU.
Got it. That's great. So looking at affordability and, obviously we want to make sure that, people aren't overextending themselves. Are there times when, you meet with clients and say, hey, maybe now is not the time, or other situations where you would recommend not purchasing a home or other real estate investments?
Yeah, I'm a fan of, making sure if I'm working with the client considering purchasing real estate, I want to look at their individual situation. If they're happy and have all their housing needs met and their monthly rent is 1,500 a month, and I'm saying, hey, to get the same property and it's going to be 5,500 a month, it might not be the best solution. I also look at how long someone's going to hold on to that property. If it's less than a 3-year period, I don't know if purchasing real estate is the most wise move if you have a short holding period. Real estate as an asset class is best served by holding it over the long run. And going back to, even if we have a methodology of getting you qualified, we need to make sure that the payment need is sustainable for you. So in the case that I mentioned previously of, if your qualifying income is X and we add a family member to add income, that's great for qualifying, but we still have the affordability, like who's going to make that monthly payment?
Sure. Yeah, and that's one of the things that I think, for people out there, that Brendan is, it's not just the home loan and then moving on. It's really being an advisor and guiding you through the decision-making process to really set yourself up for success, which I know your families and clients really appreciate. So you introduced me to a new term, Brendan, that I had never heard before, but apparently is out there on social media. But can you tell me a little bit more about house hacking? I don't know, I don't know exactly what it is, but I'm sure maybe it's something that our viewers have heard of.
Yeah, so house hacking is, a term. There's a variety, and I guess maybe I might fall into the algorithm of interested in real estate because I'm in the industry. So if you haven't heard the term house hacking, I'm assuming, you're not alone, Joe. Um, House hacking is where you can purchase your primary residence and obtain mortgage financing for your primary residence. You fully intend to live there in accordance with what you represented to get the loan. So it's totally ethical, highest integrity. Upon doing so, there's nothing precluding you from bringing in a roommate. And hey, I bought a 4-bedroom home. One of the first homes I bought was near the college area, and I bought a 4-bedroom home as a single guy, and I rented out the 3 other rooms, and I did house hacking. So house hacking is where your primary residence can generate some rental income that helps offset the monthly payment.
Got it. Very smart. You were doing it before it was a thing out there, and before social media was a thing too. So good for you.
Or it was called house hacking, yes, but
Right.
it definitely helps pay the bills.
Yeah, definitely. So a couple more questions here, but really, as far as opportunities go, are there any other opportunities that you think are worth exploring for our students or alumni out there?
Yeah. Big picture. When other people are greedy, be fearful. When others are fearful, you might want to look at, and prudently pursue opportunities. So, there has been a little bit of a shift where a couple of years ago, everybody wanted to purchase as much property as they could. That sentiment might have shifted a little bit. Now, do I want to tell you to take all of your available capital and go buy a property and sink all of your cash into real estate as an asset? No, but I want to prudently look at opportunities and determine if it's a great fit for you. Mortgage rates have been improving the last few weeks, and that's, mortgage rates aren't necessarily directly related to the Federal Reserve and how they they control and manipulate the short-term Fed funds rate. And then the Secretary, Jerome Powell, will give commentary about the market in general. But we're seeing that based on weaker employment and potentially lower inflation numbers, we're seeing mortgage rates improve. So we are kind of seeing mortgage rates slowly improve, and it's creating lower monthly payments in September of 2025 versus what they were in May of 2025. We like to do a rent versus own analysis. So again, I mentioned it earlier, if you're paying $1,500 a month in rent, we want to prudently look at the delta or difference between rent versus ownership. It may be worth taking a swing at ownership, but it could also be fine to continue renting. In California, now separately, in California, we talked about high prices, and I mentioned, higher interest rates, higher prices, creating higher monthly payments. Maybe a primary residence housing payment for a mortgage might be more than you want to spend. We lend in 40 states. Other institutions lend in all 50. So I would encourage, if you're interested in real estate as an asset class, then consider investment real estate, even if it's in a different state. And I think that's an opportunity worth exploring if you don't already own a primary residence, or even if you already do. Finally,
Yeah, I think that's one quick add there. I think it's a great thought that I had, I know we hadn't discussed that, but it's a quick plug that, USD's continuing education program here has a course in real estate investments. There's actually a certificate you can receive over the course of, I believe there's 9 courses you have to complete. But investment analysis, finance, all sorts of different things. So I would say, for anyone who's really interested in making this work, educate yourself, go to some courses, learn from people like Brendan, but reach out to the Burnham-Moores Center. We can help you, get enrolled in some of those classes for, just a couple $100 can really go a long way in educating yourself. So that's a great tip.
That's great. Yeah, my final piece was that whatever mortgage financing you get to establish real estate doesn't mean it has to be the mortgage loan you keep forever. So, if you partner up with a mortgage loan officer to assist in mortgage financing, ask that professional to let you know when mortgage rates improve, because there's opportunities where if someone got a mortgage loan last year at 7%, we're already able to reduce their rate to 6%, creating monthly payment savings.
Got it. No, that's great. So, as we kind of get close to wrapping up and we look at learning lessons, I'm sure over your time in the industry, you've seen mistakes that some home buyers make. Can you share some of those so that we can help our listeners avoid some of those mistakes as they look to purchase their first home?
Yeah, I'm a fan of not looking at properties and meeting with realtors before you've gotten your financing plan lined up, because you're going to fall in love with the property and then, oh my goodness, it costs how much? So I think it's important to meet with a mortgage professional first. I think it's important to get what's called a fully underwritten approval, not just speaking to a loan officer on the phone to get a pre-qualification, but make them fully review all your income, assets, and credit with an underwriter to get a decisioned loan approval to advise the maximum purchase price and maximum monthly payment you can qualify for. I think another mistake is just going with the first mortgage professional you may have been referred to. I think it's always good to get a secondary opinion. I think another mistake is not inquiring about down payment assistance options. They're available in multiple states, not just California. Earlier in this meeting, I mentioned California, but they're available in multiple states. And I think the fifth mistake is just not taking any action at all. It doesn't cost any money to meet with the mortgage loan officer. Mortgage professionals cannot bill you, so there's no consulting fee that they can charge. Mortgage professionals only are allowed to earn compensation upon successfully funding a mortgage loan. So take advantage of the way that works in the fact that you've got someone who is financially compensated if you're able to get what you want out of a potential transaction.
Great advice. Hopefully we save some headache and heartache for some of the viewers out there. So, and then just really kind of like the last thing that I would like to have you touch on, you know, there are probably a lot of viewers out there who are thinking about maybe, you know, making a move on something here. You know, what do you recommend they do if they do want to learn more about, you know, getting started with obtaining financing for, you know, for their first purchase?
Yeah. Meet with a mortgage loan officer. I mentioned that just previously, but before meeting with them, you know, check them out. Look at their reviews on Google or Yelp. You know, call their office and see what kind of consultation they provide. I mentioned it that loan officers only earn compensation upon successfully helping you. So make any loan officer earn the right to serve you. I'd also avoid doing an online application without first having a conversation, because there are many mortgage companies that will have a website that will make it really easy to apply online, but it then will create a full credit inquiry. And I would encourage you to not necessarily apply before you've said, hey, there is a good personality and trust match with the mortgage loan officer that I could potentially work with.
I think that's very sound advice, and I think especially for our maybe younger viewers who are used to, you know, all of the access to technology that we have, you know, think about the time that you've spent at the University of San Diego, the relationships that you've built with your peers and other alumni. You know, lean into those relationships, you know, to get the guidance and truly advisory services that someone like Brendan is able to provide you with, rather than just clicking and applying, which isn't going to provide you with a whole lot other than maybe a lot of spam. But other than that, you know, you want somebody who's really going to be able to guide you. So, you know, one last thing that I'll share is for anyone who has an interest in real estate. You know, the University of San Diego has a real estate alumni association that is, you know, has over 2,500 members worldwide. And access to those individuals are, you know, very easy to come by. So if there's any way that we can help at the Burnham-Moores Center, please feel free to reach out to us. We can get you in touch with Brendan, realtors, whatever it is that you need help with. But that's one of the things that we really enjoy most about, you know, the work that we do at the Burnham-Moores Center is really connecting our alumni to one another. And connecting students with our alumni out there. So please use us as a resource as well. But no, really appreciate all of the guidance. You know, you are truly an advisor. And I know that you've helped a lot of families and will continue to do so. So thanks for sharing all of your experience with everyone today on the webinar, Brendan.
Yeah, thank you for the opportunity, Joe.
All right. I think we are going to pass it back to Kara now to close out. But again, thank you for joining us all today, and hope you all have a great day.
Thank you so much, Joe, and thank you, Brendan, as well. For those of you who are interested in touching base directly with Brendan, his email address is brendan@brackenteam.com. That's Brendan, BRENDAN @brackenteam. It's BRACKENTEAM.com. Wishing all of you and yours a beautiful and blessed day. Go Toreros.